Hey everyone, and happy Tuesday. It's your favorite loan officer in the whole wide world. Hashtag who? It's JLoan. That's right, I'm in the building. And I looked at if there was some significance of today, but there was nothing really that I thought would be good to talk about. And so the best thing about today is that you get to have a conversation with me. And I want to talk to you a little bit about what's going on in the mortgage industry. I'm sure you're hearing it, you may be reading some things online, but it's nothing better than really getting the inside scoop from someone who this is what I do for a living. And I've been in this environment before where rates were rising. I actually came into the business in 2006 when rates were still between 6 and 8%. And so, yes, I get it. We were at 2s and 3s, and now rates are pushing your mid 4s and 5s. And that may seem like, oh my gosh, rates are rising, and I just want to stop my purchase. And that may be good for you. That's okay. But also keep in mind that rent prices are also still going up. So you have to start thinking, would it be a financially wise decision for me to invest in a home in this market, or should I hold off? That's something that only you can personally answer for yourself. But I can tell you that since October, November-ish of 2021, rates have risen over 1%. We may even be pushing closer to 1.5, and 2% in today's market. So that is a huge jump. And I did look last year for my clients that do or that they use down payment assistance. I mean, we were still looking at about 3.75%, I believe, on closing 5% grants in April of 2021. And those same grants that are available out there are pushing 5.75%. So that is a huge jump. But it brings me to the conversation of, have you checked on your pre-approval? It is very important that a lot of times people come to us at the beginning and they think once they get their pre-approval, they go out with the realtor and then they never check in with you. And then even if you check in with them, they don't feel that they need you. But in this market, and one thing that I offer is I do offer a white glove service on every one of my clients, not just in a rising rate market, but always, that I say, once you're pre-approved, I want you to know what the price of this home is before you go and see that home. Do you like the payment based on today's rates? Do you want the closing costs associated with that property? And that's something more that you need to do today than you've ever needed to do before, because rates are rising and they continue to rise. So if you got pre-approved in November, or you got pre-approved in December, or you got pre-approved in January, rates are continuing to rise. So what you may have qualified for then, you may not qualify for now. And let's even take it a step further, that if you qualify, the question is, do you even want the payment that is now associated with that purchase price and today's interest rate? Because qualifying, I could sometimes qualify people for $1 million home, but that doesn't mean that they want a $6,000 or $7,000 or $8,000 a month payment. So it's very important for you to, I'm going to skip here, but you must know your goals. You must know what it is you want to pay and what you're willing to pay, and is it going to strain you? Because just because we can qualify you for it, at the end of the day, we don't make your mortgage payment, okay? We don't handle your finances. And the worst thing any loan officer, but especially me, wants to do is put you in a situation where you are house poor. That's the word that's out there, right? That you're working hard just to pay house bills. And no one really wants that, okay? So if you have already been pre-approved, whether through me or through your preferred lender, you must follow up with them on a weekly basis. Again, all of my clients, you already know, send me the address, and it's a lot. Believe me, it's a lot of work that I put on myself to make sure that there is no heartache in your purchase and your offers, that you are truly understanding what you're getting into. And honestly, in this market with a lot of clients not being able to get accepted offers, it is more stressful on me than anything, because I'm having to push out multiple housing quotes to make sure that you want to buy these properties. So I ask you to please be patient with me as I am working through them, but I'm getting multiple at one time. So again, I've spoken on the fact that rates have risen yet again, and honestly, based on the talks from yesterday, they may be raising rates again in May. And so, we want you to find a house fast to get you locked into today's rates, but I understand that the market is not as easy as it used to be. So it's very important for you to just constantly check in and see where you are. And if it ever gets to a point where you are not comfortable, then maybe you do need to make that decision that it's time for me to hold off, okay? Now, I do want to point out, understanding that your purchase price and your payment are two totally different things. Now, I have borrowers that get mad at me, okay? That happens, and I'm okay with that, because it comes from a misunderstanding of what happens outside of working with me. So a borrower received a pre-approval letter from X bank, and that pre-approval letter says, hey, you qualify for $230,000. That's great. But when I do a calculation, I'm not just looking at purchase price, I am looking at your payment, because your payment is what counts against your debt to income, whether that's a $500,000 home, $1 million, or $100,000 home. If in your debt to income, you cannot qualify for the payment associated with that price range, then you don't qualify for that loan. And so what happens is borrowers say, well, why can they qualify me for $230 and you're saying I only qualify for $175? Which then I would respond, well, you only qualify for a $1,500 payment, or a $1,300 payment, or a $1,700 payment, and it would be very hard for you to find a property at that price range that's going to yield this payment. And so keep in mind, that's why I do pricing scenarios, because I could throw out there, go find a $300,000, $400,000 home, but then when we calculate it, you don't qualify for that home, or if you do, that payment that you expected in your mind is no longer there. So it's very important to look at payment, and I work backwards. In this market, this is what that range will be. Keep in mind that if you buy a house in Tarrant County and buy a house in Collin County or in Houston, at the same price range, they're going to have different property taxes and different homeowners insurance. If you're in a flood zone, if you're near where there's hurricanes, your insurances will be higher. We have to factor all of that in. So just because you qualify for $230 in Dallas doesn't necessarily mean that you're going to qualify for $230 in Houston. So you have to be we have to be best friends, because if we're not best friends, I can't give you my best advice, and it is not ever wise for you to look at what is online, because online, I call it, they're baiting you in. Online is always going to quote 20% down payments, and if you're not putting 20% down, well, those rates don't work for you. But it also does not fully verify everything associated with the property, from HOAs to property taxes in two different taxing entities. Sometimes it only has one. So if you look at that information as a borrower and you're not really aware where to go, or that something's missing, you are falsely telling yourself that you qualify for these homes, and that's why you seek out a mortgage professional. So if your mortgage professional does not have time for you, or they are not readily available, if they don't seem like they're helpful or your best friend, then you need to find another loan officer that's willing to dedicate the time to help you through a major purchase. Now, keep in mind also the type of home that you buy matters, because if you buy a single family residence and you buy a condo, where condo fees are super expensive. So just because you qualified for a $230,000 single family residence doesn't also mean that you'll qualify for a $230,000 condo, because the fees on a monthly basis may cost more in a condo than there are a house. These are just several reasons to really have that bonded friendship and trust with your loan officer to help and guide you through your process. Now, just to show you where rates, just to show you, I can't ever really tell you the exact rate, so I'm just giving you a hypothetical situation. But on a $400,000 house at 3.5%, where rates were last year, they were actually lower than this. And if rates just went up 1%, which they've gone up more, this is an increase in $231 a month on your monthly payment. And you have to say, oh man, is this going to stress me out? Is this comfortable for me? And that's just a 1% increase. What if it increased to 1.5%, or where we are now, somewhere between 1.5% and 2%? That payment is going to be drastically different. So again, the reason I tell you this is that I want you to be very wise. I want you to make really great decisions and choices. And we are in a different market than we've ever been in. But again, I will tell you, rates will always rise and rates will always drop. It's always a matter of time, and no one can tell you whether that's today, 5 years from now, 10 years from now. So yes, I can't sell you, we'll just buy now and we'll refinance next year, because I don't know what next year does. What it will do. But I do know that at some point, if you are going to keep your property, at some point rates will drop, and we can try and refinance you at that time. But keep in mind, that's not a guarantee either, because you still have to qualify for that new loan. And if your circumstances have changed, you may not qualify for refinancing. And so these are all the things that happen in an ever-changing market that you need to be aware of. As always, I am so happy to provide you with information and education, and I'm always happy to answer your questions. So if you have any after watching this video, or anything that you saw or read online, please feel free to give me a call, inbox me. I'm on every social media platform out there, from Twitter to Instagram. I have a TikTok, I'm still learning that one. But and then all of my Facebook pages and LinkedIn. So any way you want to reach out to me, you can find me, the JLoan. I'm there, 817-601-5456. I hope that you have a fantastic rest of your week, and be blessed, be safe. I hope you find a property if you're looking. If you want to look into refinancing your current home because you just can't find a home in the market and you need to do some upgrades, there's cash out loans if you have the equity, and I'd love to help you take a look at your refinance. So I'll talk to you soon. Have a great week. Bye.